So today I'm going to do the UK stocks I'm buying August 2024 edition. This is where I do the monthly series that I've done for many years on the YouTube channel, and it just keeps that transparency so you know what stocks I'm buying and what stocks I'm selling. So if I ever make any move in the markets, they're always here on this monthly video. And I'll do my US one in a few days time, but today we're going to go through the UK stocks. And it was a bit of a slower time. This was from the 1st of July to the 1st of August. So in that time frame, I did buy 3 stocks, and I did, we're going to say sell a stock, but I trimmed a position. So those are the moves that I made, and today I'll show you those moves, why I did them, and I hope you enjoy it. If you could, hit the like button. Let's get started. Now, as always, if you want to see more exclusive content from me, join the Patreon. Link is in the description. £5 a month, you get to know what I'm buying and selling in real time. So since the 1st of August, obviously especially with the crash that we had on Monday, I was very active buying UK stocks, but they won't be in this video. They will be on the stocks I'm buying September video series. So if you want more up to date, that's the place to be. So you get the live buy and sell alerts on there, 2 exclusive videos a week, a Discord with 500 members on to talk about stocks, including me, and it's all for £5 a month. As well as that, if you want some free shares and start investing, join Trading 212 with a link in the description. That's personally the investing app that I use. If you join through that link, you can get a free share worth up to £100. Let's get on to the UK stocks I'm buying. So like I said, there's 3 that I bought and 1 that I did trim the position on. So the first one is Money Group or MoneySuperMarket. I did once again buy in MoneySuperMarket Group. This is getting quite a large position in the portfolio now. I could see it breaking into the top 3 position. I could see even maybe coming the number 1 position, depending if it goes to the right sort of valuation. But I was buying some shares. So I've had this for a while, but the stock hasn't actually really done that much. I've been owning the stock for probably about a year and a half now, and the stock has really not done anything. However, I think that is going to change at some point. A couple of reasons why. P/E ratio, I think 14 times earnings for this company is too low. We'll talk about that a little bit more in a second. I think that should be more towards 20. Dividend yield of 5.8%. We're nearly on a 6% dividend yield. By the time they hike it up again by the end of the year, that will be above a 6% dividend yield, which is incredibly high, especially for a company that is not only just a dividend stock, but a growth stock. And I think with the interest rate cuts that are coming, that might force a few more people into a dividend stock, and I think this might be one that benefits. But we'll talk about that a little bit more in a second. MoneySuperMarket, I'm sure you know, but they're a comparison site, especially with everyone wanting to save money at the moment. They do offer a lot of products, as you can see down here, like car insurance, pet insurance, travel insurance, which is really good. It's a diverse business, because then what happens if there's a part of the company that's not doing very, very well, another part of the company normally makes up for it. And if you look at the current financials that they just brought out, which was quite recent actually, it was on the 22nd of July, you can see the financials were very impressive. The growth was very good, EBITDA very good, profit before after tax were very good, net debt was down 54%, which is great, dividend once again getting hiked up. All the numbers inside the company were going in the right direction. And top that off with, like I was saying, this is historically the lowest P this company has been at in the last few years. In fact, I think it's ever been at. The company trades at 14 times earnings, but yet the lowest the company has ever been is around about 17 times earnings, 18 times earnings. So it's historically the lowest the company's ever been valued at as well. And I think for a company that has 6% dividend yield and the growth they offer, I think it should be a lot higher. Now, you do have also the energy market coming back, so they do energy switching, but obviously because of what happened with the energy situation with Russia, Ukraine, the price cap, that hasn't really been working for them in the last few years, really since 2020. That is due to come back at some point in the next, well, it should come back at Easter, it might come back even earlier. That's going to be another key driver for them next year. The other thing as well is interest rate cuts, and that might also help with other parts of the company. For example, home buying, more home insurance, for example. You might get more loans with people being able to get credit a little bit cheaper, mortgages coming back potentially. So yeah, this would really send the company onto another level if the interest rates keep coming down as they are doing. Now, the growth has been historically very good for the company. They've always grown revenue and profitability, as you can see, apart from the dip during the whole CV situation, which is understandable. The forecast is still continuing for it to grow. Analysts are expecting profit of basically 100 million in the end of 2026. I mean, if they do 100 million profitability in 2026, I think this share price goes to double from where it is right now as well as getting a really good dividend yield, and that's why I'm quite heavily buying it at the moment. Financial health wise, like I said, very good balance sheet, and they have just paid off. This is a little bit out of date because they've just paid off another chunk of the debt, so it's even stronger right now. And obviously they make good amounts of profitability every year as well, as you can see. Great profit margins. Ownership wise, it is noting there has been a little bit of an insider buy, not a key role inside the business, but I really like this one, guys. I'm really pushing towards it coming a top 3 holding in the UK portfolio. I'm even considering maybe even putting it up to the largest position in the UK portfolio. Next one, Hollywood Bowl. It's made its return onto this list. It's been a while since it's been on this list, but I thought, you know what, I'm going to buy some more shares. Stock is having a bit of a correction, down around about, well, it was down about 10%, it recovered it, and since what's happened this week, it did have a little bit of a drop off once again, but we'll see what happens there. So I thought I'm going to buy it on a correction. I think 15 times earnings, once again, is too cheap for a business like this. I think it should be more towards 20 times earnings, the market average for a company that is doing very good growth if we were to go have a look at the financials in a second. Same again, you're picking up a 4% dividend yield, which isn't that bad at all. And even though it's a stock that I've held for a long time, I think 4 years now, you can go back on the old, you know, I've got videos here about Hollywood Bowl 4 years ago. So even though I'm up over 80% on the position, and to be honest with you, if I didn't keep averaging up, I'd probably be even more up on the position. I'd be over 140% on the position if I just kept my original share price. But I keep buying more. I keep thinking, you know what, it's a quality business. I'm going to make my position even bigger, and I keep buying even more, and that's what I did. People just seem to like put it down. See, I won't say the name, but there's another podcast that I do really like. Actually, I'm sure they don't mind me saying. I listen to the Investor Way podcast. It's a really good podcast. This is not me having a go, but I was listening to them guys covering it on the on their podcast, and they're like, yeah, we don't really like it. And I was like, what? And they said, like, Tesco's more than Hollywood Bowl. I was like, hold on, you're getting like nearly the same dividend yield, the valuation's nearly just the same, the growth's a lot better. Like, this is, I can't believe it. Like, people just don't seem to be sleeping on this one still a little bit at the moment, and yet the company's growth plan is clearer than ever about where the company could potentially go in the next kind of few years. Obviously, most of you guys know they're in good locations where you might go to for something to eat, the cinema, you go to the bowling alley. Not just the bowling alley though, they've got a few things like the food and drink, they've got the amusements, and they've also expanded into golf as well. They're doing a bit of mini golf. What is the big growth driver for the business though in the next few years is the acquisition and the expansion into Canada. They are going to try and copy and paste their business model and then put it into Canada. So far it's had the success. The growth was up 8%. Group profit before tax was up 10%, and obviously they increased the normal dividend as well by 21%, which is very good. When you look at the Canada growth, very good. Obviously there's a few acquisitions in there, but it's currently growing at 46%, which is very good. That is the growth driver for the business in the next few years, so we'll see how that keeps on going for them. Like I said, very good track record, good revenue, good profit growth, financial health wise, absolutely amazing balance sheet. Once again, no debt on there. Insider wise, there has been a couple of sells inside the business. I'll make you aware of it. You know, if there's some buying, I'll let you know of it. So it's only fair that I'll let you know if there's some selling. But I have been in this business for many years now, and a lot of these insiders bought when I started buying. So like me, you know, they're up mega amounts on the money that they bought during. A lot of insiders bought during the CV dip, and then a lot of them bought during the Liz Truss time. So a lot of these guys are up a fair amount on the shares that they have been buying during them time frames. So I do not blame them for maybe taking some profit off the table and treating themselves. So I've got no issue with that one anyway. The last stock I bought was Gaming Realms. So this has been all over the place in the last month. Sometimes it's up, sometimes it's down. But I think it's a very good business at 19 times earnings, especially when you look at the financials. This is, you know, we talked about these guys, you know, MoneySuperMarket cheap, Hollywood Bowl cheap. In my opinion, Game Realms in 90 times earnings, but this company's growing at like 16%. Net income's up 53%. So this is even more attractive when you look at what these guys are doing. 112 million market cap. Game Realms, what they do is they provide a lot of these games to iGaming companies like DraftKings, William Hill, Flutter, and they basically let them have access to these games for the iGaming side of it. The most of their brand is the Slingo brand, and they do different variations, as you can see here. They've also got like Space Invaders, Deal or No Deal, Slingo, and yeah, they basically let all these iGaming businesses that don't want to spend the time and the cost of creating these iGaming games, they just, you know, let them have their branding on top and use these Slingo games, which obviously is a really good growing space, because you guys know I do like the iGaming space, especially in the US. We've talked about it many times before with the likes of Evolution and DraftKings, and you know, it's a big growing space. I mean, this is worldwide, it's going to grow at a CAGR of 6%, but obviously when you look at some of the other markets like the US, there's really big growth in them sort of markets. Great track record, revenue going up in a really good way, profit going up in a really good way. Once again, you're talking about business which is a very good balance sheet, as you can see here, no debt on there, quite a decent cash pile. What I will say is that they've actually got a little bit of stick for this, that they're not actually using the cash pile for like share buybacks or dividends, so I don't mind. I'm happy with them holding the bit of cash at the moment and then deciding where they go from there. Insider wise, there's not much going on. There was an insider buy, which was a member of the board, which isn't a big role like the CEO or CFO, but I kind of point that out there. But I think Game Rounds is a very interesting opportunity, and that leads me on to the stock that I did trim. So I did trim 5% of my Supreme position. I just thought, the stock's been on a really good run. It's up 83% this year. I'm going to just take a little bit profit off the table, and you never know. We've seen it before. You've got all this, you look at this, how much I'm up, and then out of nowhere it goes down for maybe no reason. Maybe some regulation comes out. I just wanted to protect a little bit of profit off the table with this one and invest it into other opportunities. It's not exactly terribly valued at 10 times earnings, but I just wanted to protect a little bit of capital here and use it somewhere else, and I thought it was a good time to just trim the position slightly. I've still got 95% of the position here, so I hope I am wrong, and I hope it continues to do very well, because I have 95% of the position still to go, and obviously I'd rather that do a lot better than the 5% that I sold. But yeah, just protecting myself here, but I'm still very much in Supreme and just releasing some capital there. So yeah, that was a 5% trim on Supreme, which I'm really happy about. Anyway, so those are the 3 stocks I bought. That's the one stock that I did trim for a good amount of profit, and yeah, just keeping you guys in the loop, being transparent, so you guys know what I'm doing in the stock market. So those are all the moves that I made up to the 1st of August. I've already been quite active in August so far, but like I said, you've got to be on the Patreon to know them. Unless you wait for the next update, which will be in September. Hope you enjoyed the video, guys. If you could, hit that like button, and I'll see you in a bit.